You're ready to buy the next home of your dreams, but there is one big question that must be answered first. If you already own a home, should you sell it or buy the new one first? The answer to that question depends on two things. Is it a buyer's market or a seller's market? And how do you feel about taking risks? You could find yourself with either two homes or none at all. Which of those thoughts causes you the most concern? I'm Sara Driscoll in San Diego, California, and in this video I'll walk you through 3 ways to buy first and 2 ways to keep from being houseless if you sell first. Start by knowing the options and involving lending and real estate experts before taking action. Selling your home before securing the next one can spare you the stress of having 2 house payments at the same time. But if you commit to sell your home and then can't find the perfect place to buy, you run the risk of having to move twice. That's expensive and a lot of work, so let's take a look at some options to buy and then sell. If you're obtaining a loan for the purchase, the lender will count your current house payment and the new one when determining the amount you can borrow. If making 2 house payments is more than you can or want to do, here are 3 options. Number 1, make an offer contingent on selling your current home. That means you're only committing to buy the new home if you can sell your current home. While this is a preferred choice for most buyers, it can be challenging to convince sellers to accept contingent offers, especially in a seller's market like San Diego right now. Sellers often have multiple offers and they prioritize by price and risk. But I know deep down you're feeling lucky. If you want to try it anyway, here's how to give yourself the best chance at success. There are 3 stages of being contingent. 1 is your home isn't on the market yet. You're asking the seller to take a risk on you, but you aren't taking a risk on yourself since you haven't put your home on the market. The next stage of contingent is once you've accepted an offer on your home, but you're at the very beginning of the process. Buyers can cancel for a lot of reasons, and then you'd be back to square one, along with the seller who took a chance on you. The third stage is when you're well into the escrow and buyers have removed contingencies. At each stage, your contingent offer becomes a little more viable, but in a red-hot market, your odds of success, even at this point, depend on whether the seller has any other options. And just for fun, consider for a moment, if you receive an offer contingent on the buyer selling their home, how seriously will you consider that one? The bottom line is, to be taken seriously as a buyer, you really need to be at stage 3, where you're solidly in escrow with a nice clean offer. The key is to plan ahead with your realtor when you first begin thinking about buying another home. I remember hearing from a client at 6:30 one Sunday morning that they saw a home at an open house the day before and they wanted to buy it. The seller was removing it from the market for 5 days for personal reasons, so we had until Friday to get my client's home on the market and sell it so they could make a strong offer on the only home they wanted in San Diego. It was all or nothing, and we had just 5 days to do it. We actually pulled it off, but even they would tell you to call your realtor earlier in the process. Number 2, get bridge financing. A bridge loan is a good option if you can't qualify for 2 mortgage payments. You can borrow up to 75% of the value of your home, and the bridge loan pays off your existing mortgage. Interest doesn't begin to accrue until you use the funds to close on your new home, and no monthly payments are required. The accrued interest and principal balance are paid in full when you close on the present home. The same lender does the purchase loan for your new home, and you can borrow up to 80% of the purchase price on that loan. The loan fees on a bridge can be expensive, but it's an option for anyone without enough income to support 2 payments. Your home must be listed for sale at the time the bridge loan closes. Number 3, a home equity line of credit. If your income is high enough to qualify you for 2 mortgage payments, adding a line of credit on your current home is probably a better option than a bridge. Once it's established, you don't pay any interest until you actually use the money. So start this process early and you'll have it ready when and if you need it. With a HELOC, your home can't currently be on the market and it can't have been recently offered for sale. With either of these options, be sure to consult with a good lender who can advise you. Number 4, if you are of retirement age and have an IRA or 401k, you can also set up monthly disbursements to cover the mortgage payments until you sell your current home. Taking money out of a retirement plan in a lump sum is sometimes done, but with tax ramifications, I won't cover that in this video. Just be sure to consult with your financial professionals. Number 5, if you have a friend or family member who can help out, they can lend you the cash for the down payment and record the lien on your current home. Then you can repay them when you sell your home. This needs to be disclosed in your loan application, but it's a solution that can work if you have a wealthy relative or friend who wants to help you in the short term. Now let's take a look at selling before you buy. This approach provides you with cash in hand and simplifies the process of qualifying for your next home. You are now officially a force to be reckoned with. Option 1, sell your home and move into an apartment or short-term rental or in with family. It's a simple concept, but expensive and not ideal in most cases. However, there are 2 ways you can probably sell first without a double move. Again, we'll assume it's a seller's market. The good news is now you are a seller and can call more of the shots. Option 2 is you can offer your home for sale contingent upon finding your next home and closing on it. Some buyers may be willing to give you some time to do this, but most buyers today have made offers on a lot of homes they didn't get. And if they take themselves out of the market waiting for you to secure a home you may not find, they know they'll lose out on other homes. So be aware that you're now asking your buyer to take a big risk for you. Option 3 is a bit easier for buyers to accept. You close escrow on your home sale and rent back after closing for a month or 2. If your buyer is getting financing, their lender will allow a rent back of up to 59 days and still consider their purchase to be owner occupied. Longer than 59 days and the lender treats them as an investor, which changes their loan program. If the market is hot enough, buyers will agree to this if they want your home enough. I've even seen buyers offer free rent, again in a hot market, but traditionally the seller pays rent equal to the buyer's house payment. That way buyers aren't paying out of pocket for you to live in their house. The value of this option is you are a viable buyer once your funds are in the bank after you close on your sale. The risk of this is you might not find and close on your new home before the rent back period is over, so there is a clock ticking and you may still end up moving twice. You can only make a good decision when you have good information. If you're interested in discussing your options, we can take a look at your San Diego home and advise you on how to best structure the sale and purchase. Just book a call with the link in the description below. I'm Sara Driscoll, and thanks for watching.